Hello everyone, thank you for joining. Today we're going to cover the subject of data, crime data, how it impacts the business actually. We're going to start off with a quick round table. Again, thank you all for being here. Let's start with Nigel.
Hello everyone, great to see you. Nigel Hayward, I'm the Chief Digital Information Officer for Financial Crime at NatWest Group. Got about several decades of experience in financial services, building solutions, as you can probably tell by the lack of hair. So I think that's enough about me. Chris.
Thanks, Nigel. Nice to see you all. Christopher Sanders, Global Head of Customer Intelligence Solutions at Quantexa. So Quantexa is a decision intelligence company, provides software to help organizations connect data and make better decisions. And I look after everything we do globally in the sales and marketing, customer 360 and growth space across all of our industry verticals. Background in banking and data and analytics.
I'm Jeremy, the General Manager at N26 for France and Benelux. N26 is a full-fledged bank, a credit institution live in 24 markets with 10 million customers in Europe, only 10-year-old, 9 billion valuation and 1.8 billion money raised. So full-fledged, I guess, on top of data. So that's what we're going to discuss today.
We're going to start off our discussion with the data journey. So we're going to start off with Nigel and then we'll go through with Jeremy. We're going to talk a bit your data journey, how you got here, and the different challenges you encounter. So we're really excited to hear your story.
Thank you, Révèle.
Awesome.
And by the way, if you can't hear me, just wave and I will speak up. So NatWest Group, hopefully many of you know NatWest, so just a little bit about that. It's a UK-focused bank, does have an international footprint as well, has about 20 million customers, and about 1.5 million of those are corporate, commercial, institutional customers. So it's a very, very big footprint and obviously very significant for the UK. And when you think about financial crime is really about protecting society. If you've been in technology for as long as I have in financial services, you've spent your life using technology to make products consumable, removing the friction, making them easy to use. And in doing so, we've also removed the friction from the bad guys. So financial crime is really about protecting all of our customers and consumers more broadly. And data is at the key to that. If you don't have data that's good, if you don't have data that you trust, you can't use sophisticated analytical engines that help you understand customer behavior and detect and prevent financial crime. So NatWest, about 10 years ago, probably like a lot of banks that's grown up from the 18th century, a lot of businesses, they all had their own data silos and the data was inconsistent, a lot of it unstructured. And over the last decade, driven by the need to detect and prevent financial crime, we've moved to where data is starting to be mastered. Customers, instead of 18 different customer masters, we're moving to one. Transactions and so on will move to consumable products that be consumed by many. So that's the architecture, and we're well on the way there. But you also need to do other things. You need to change the culture around data. You need to educate everyone around why it's important and how it can really help them in their jobs. You can use it then to remove friction, more friction from customer journeys when you're doing outreach for financial crime purposes. And then you get onto the path for exploiting for complex analytics, whether that's contextual, where you truly understand the world that the customer exists in, whether it's using generative AI, whether it's using agentic AI or supervised machine learning. All of these are so much easier and exploitable when you've got a coherent data architecture with products you can consume.
Thank you. Maybe Jeremy, your view?
We have a different approach by design. So N26 born 10 years ago, it means that everything was embedded with the right data infrastructure to begin with, which is a big game changer, especially in the banking industry. So for sure, we had the right infrastructure, everything was already connected. I think if we need to talk about the journey, the first thing, and I think it's also a big differentiator across all the industries by design, we consider ourselves as a tech company, which means that everybody we hire, and it goes from marketing toward financial crime, everybody needs to be comfortable with data. So it's really part of our interview process. We only hire people who actually know how to handle that, who are taking decisions based on that. So by design, it's already part of our DNA. I think it's pretty critical, especially in this kind of area. When we talk about journey, I think what is kind of interesting is that it's more for us what to learn a lot about banking. So we had the data, we had the right people. It was more about how to use them. Obviously, we're going to talk about AI, and we're on the forefront of that. But it was more for us like we had the data, we had the people. How we make sure we use them in a wise way, and that's what we did quite well in the last 3 or 4 years.
Thank you. Nigel, your journey was a bit more difficult. Here we had data, but the culture was already embedded there. The data mindset was already there. And for you, what are the other challenges apart from the culture? What did you face to go from 11 data sources to 2? So please tell us the main challenges you've encountered.
Yeah, there are several challenges, and you can break them down into. Can you hear me? Okay. Yep. Yeah, you can break them down into, first of all, the technical challenges. How do you break these silos down? How do you turn data into something that is valuable and reusable? And what you need to do is, as Jeremy said, is you need to change the mindset of people. People need to understand banking now is a technology business. All right, so at NatWest, we have what we call a digital spine, right? That is a composable architecture that we want all of our services to consume from and use, because we can be faster in providing new solutions and innovating and so on and so forth. So the first thing was to get everyone to understand you got to be a digital bank, you got to be a digital platform, and data underpins that. The second thing then is about caring for data. This thing about data quality, it's real, right? Whether you believe in the V model or the C model, it doesn't matter. They're actually the same. The overall veracity of your data is really important. So if you don't care for your data, if you don't get it right first time, you ain't going to benefit, or you're going to have lots of, in financial services, a lot of older organizations will have gone through many data remediations that will have cost hundreds of millions for regulatory reasons, right? You fall down that. So you've got to address that part. Quality is key. And then in large organizations, accountability. Okay, I know it's not a technical thing, but accountability. People who produce data have to care about it and own it and make it ubiquitously available. And those who consume it have to consume it in a way where they're just not copying the data everywhere. Right, you've got to have a clear architecture. So you do that, then what you can do is let the 1,000 poppies grow. And the 1,000 poppies are around how you exploit that data to learn about your customers, understand their behavior, remove friction from the journeys where it's not really needed, and exploit much better capabilities for our colleagues, right? Whether it's through agentic AI, generative AI, etc. Right? And we are doing this now today. We have an industry-leading capability we built for perpetual KYC. So for all of our complex customers, we understand their behavior. We've been monitoring them real time, their transactional activity, account activity, what products they use, how they use it to inform us, which benefits us from a financial crime risk management perspective, as well as informing us in terms of how to shape future products.
Wow, that's amazing. Just how long did it take?
The financial crime journey has been underway about 5 years. And we're at the point where financial crime is no different to most transformations, right? Normally, you get a really big reason for the transformation. In financial crime, it tends to be around brand reputation, right? Fines and so on. So people chuck a lot of money at it and a lot of people at it. But what NatWest did is it fixed the source challenges, which was the data, right? Because once you can trust the data, you can then build things like perpetual KYC. It took us 2 years to build that. We've got a composable architecture. There's 18 different parts. We deploy 1,200 changes a year to that architecture. That's an unusually high volume of change. in financial services, right? So if you get the architecture right, you use smart capabilities like Quantexa and others, you can really make a big difference.
Thank you. And Jeremy, what about your challenges? Because I think they're a bit different. You got the data.
Yeah. So just like, by the way, financial crime never sleeps. So even if you work for the last 5 years, we see that actually people tend to be very creative. So you need to work more and more and invest more and more in that area. I think for us, like having the right infrastructure, the right people, like the real change is actually it's not the quality of the data. We understand that. It's more how you use the data in the sense that, like, for instance, and especially I like this example on fin crime. Even the definition of the same data set is different from one team to another. So when you talk about like fraud, people have different vision of what is fraud. So even just like not structuring the data, but making sure like they have one source of truth and everybody speaks the same language across first fin crime teams, but like then across all the company is quite interesting. Like fraud is one example. Trust me, like people don't understand that fraud and fin crime are different things, and money laundering is the third thing. In the same way, KYC, the definition of KYC is different from one team to another. So really making sure like people not only speak the same language, but use the same data point and like are documented in the same way in the database is quite useful, because what you see is like people are moving, changing changing from one team to another, and then people don't know what the data are exactly. So like documentation is pretty key for everyone to understand that across the board. So big learning from us on that side.
That's interesting. So here we have culture, changing the mindset, a lot of work to stabilize the data. And here it's also it's a bit of a similar way. There's a definition to have the same, everyone to be in the same mindset and have the same definition and requirements on these data. So you went from financial crime to the business. How did you get from, because usually it's like separate worlds. Can you tell us a bit more, when we're talking about financial crime data, how did it impact the business? And
yeah, and I'll be brief on this, because you could write a book on this. I'm not going to write that book, but firstly, a lot of franchises, a lot of businesses, they see financial crime as an impediment to their businesses. So you have to change the mindset, and that happened from the top, right? So they go to jail, quite frankly, if there is a financial crime issue in their business. It's that simple. So you get their attention. Then secondly, once you've got this ecosystem, you enrich their business. You're generating insights that helps them understand their customers in a much more enriched way than they have before. And the context is different, right? What you need for financial crime, in PKYC, we have over 5,000 data points on our customers, right? That wealth of data can be used to help them understand how to build their businesses. But the other element is really around cost as well. All of our businesses care about the bottom lines. You know, if you, at most financial crime, go through, spend a lot of money, then optimize. And then a lot of businesses stop, and then they get in trouble again, right? So, you know, we're in that optimization phase, but we're moving to what we call dynamic risk management, where we are always monitoring. And that's a different architecture, but it's built on the foundation of data. It's built on the foundation of generating customer insights that are valuable for them, as well as managing the risk across the bank.
And Chris, how about you? How do you see this move?
Yeah, I would echo a lot of what Nigel has said there, but I guess in particular, if you do have that robust financial crime control risk framework in place, and you have the right tooling to make sure that's at the right level of effectiveness and efficiency, then it really allows the business to grow safely with confidence, right? Because you have the right guardrails in place, you almost have the safety net in place, and you know you're going down the right tracks, and you can pursue that in a really meaningful way. If you get it wrong, I think Nigel alluded to it earlier, you're going to create more friction for customers. They might be having payments declined when they don't need to be. They might be experiencing quite long and arduous onboarding journeys. So there's definitely benefits direct for the customer from that perspective as well. And I guess where we see those benefits maximized, to Jeremy's point really, is where if you have this single view, this contextual view, as Nigel described, probably the best view of customer you've ever had within the bank, and you can effectively leverage that across departments and across the customer life cycle, from prospecting through onboarding to in-life management and engagement and risk management, all the way through to exit. I think that's where you're really sweating that asset and maximizing the value for the bank.
Great. And Jeremy?
There are two sides to the growth area, actually, interestingly. The first one sounds stupid, but very straight away, and we also learn it like the hard way. You don't want to onboard like the wrong customers. So, and this is where data is super critical, and like we worked a lot there. Especially we went through hypergrowth, so by design, like you don't even understand what's happening at this stage, and like we really learn, and we became like really top players in this area, and trying to really understand who you are onboarding to make sure you don't target the wrong customers to begin with. And this is where data is super critical, especially now marketing is also super data driven, not just FinCrime, but actually marketing. So we connected the two areas like pretty heavily to make sure first we don't onboard like the wrong customers to begin with. But then also as a fast growing company and like scaling for us, it's super critical that we manage to automatize. So it's not, we want to make sure that the FinCrime team, or like in all those areas that are super operational, scale or have to scale much lower than the rest of the company. So obviously when you're flat companies, this is just like an area you're just trying to improve. But for us, we need to ensure that like the scaling part of it is like fully automatized. So, and we are at this stage, and this is what data and the way you use data and AI is super critical, because you want to make sure that if you do 2x in terms of growth or in terms of number of customers, you don't have to do 2x in terms of operations, because like this is a direct cost. Like we are business oriented, right? So we need to make sure that as a scaling company, you don't scale your cost with the size of the company.
Interesting. Highly interesting. And we started talking about AI. Everyone loved that subject. Maybe we dig a bit more into it and maybe have your view. Of course, it's, I imagine, critical, but how does it really apply, and how do you really, I mean, on a day-to-day basis, how does it apply? So we've settled the data part. We've consolidated the data. We have clean data. Now, how do we capitalize on that?
Yeah, and this is really interesting because, I was at universities in the 80s and I built a neural network. It didn't work. It was slow. It was cumbersome. There wasn't a lot of compute. So, and I built algo models in the 90s, right, which are based on principles of backwardation. So the point is, AI has been around for a very long time, and it's evolving. And if I just think of financial crime, we've got many tens of models in place, to help us detect better, to help us discount better, and inform our customer journeys. But what's really different now is we're through the hype cycle on generative AI, right? So, supervised machine learning is brilliant, right? But there's a darkness to it, which a lot of regulators don't like. That's opening up. When you get to evolve that into contextual AI and the use of networks, they're very transparent, right? They're very configurable and they're very powerful, and that really does help you understand customers so much better. And then if you evolve that into generative AI, and in particular if you put that on top of contextual AI, where you've got structured information, that is brilliant for investigators. And we have that in a pilot, we're exploiting that more. And then you evolve to agentic AI. And last week, some of my team were demo into the board something that takes a human 56 minutes, an agentic AI, right? And this was a 10-week experiment. We've got it down to about 80 seconds, right?
Wow.
So that journey has a long way to go, but the safeguards are there, the ethics are there, the transparency are there, and it's,
Yeah.
this hype cycle is different. We're through the hype cycle. It's now about exploitation.
Okay. Just let me bounce back. On the regulator side, are they open to it, or are you facing some challenges?
No, they are open, and the regulatory environment is different, obviously, across the world, different jurisdictions. Some banks, the red bank, as we refer to them, HSBC, have been really brave on how you use supervised machine learning in some traditional places, and they've brought a lot of regulators along with them across 10, 12 jurisdictions, including the UK, and that is opening the way. And we've got the advantage now that governments want to see this type of technology driving growth, right, in their nations. So there's much more openness to it. And there are clear standards around ethics, transparency, and so forth. So as long as you combine with those, you have a chance of proving to the regulators it's the right thing to do.
That's good to hear. And Jeremy, are you facing the same challenges, or...
So interestingly, the different regulators have different view on AI. So France is on the forefront. They are using AI to audit the French banks. So by design, they understand that. In some other markets, because we have like a wider view, we were actually in Germany educating and working with the German regulator. I think in the south might be different story. So you see like it's clearly a journey, and like as a bank, we are trying to do our best to educate the regulators around that. But I think in general in AI, taking two kind of examples, because I think for us, we've been using it for years now, so we have some track record. We never really talk about that until it became cool, but we're actually using that for quite some years now. And to give you some numbers, we reduced like the fraud by more than 10x. So I think we're now down 95% or 98%. So it became very marginal, really using it. So using our own proprietary system, but like kind of like, I wouldn't say easy to develop, but really develop in-house. So really like fraud detection, but we now even go even further. So we even capable to detect fraudsters even before they come on the platform. Some cool example actually from last week. People were asking why our conversion funnel for new customers were down. Is because last Thursday at 4 a.m. we detected 400 guys who tried to, one guy who tried 400 times. I don't know what was the pattern yet. But 4 a.m., so fully automated, we managed to reject those guys like even before like they went onto our platform. So really like here there's lots of use cases. So this is fraud detection. We're now also working on the agentic side, how we can also improve all the operational tasks from that were manually done. Still on the way, but definitely like quite some impressive results that are going there. So. And here, like also, we don't see like any pushback from the regulator. As soon as you are data-driven and you show some results, it's pretty quite obvious that it's working. We're detecting some patterns nobody would even think about because people are very creative. And I won't say what, but for sure it's interesting. So definitely like a super useful tool, not just even of cost, but because we're facing some creative people on the other side. So it's also a race that we need to race against, and we're investing a lot there.
Thank you. That's very interesting, both of you. And Chris, have you developed any new models that I think they cover both stories, but...
Yeah, so I guess from an AI perspective, one of the interesting trends that I've noticed is to your point, getting past the hype cycle and people actually now starting to talk more about the benefits they've realized through the use of AI. I saw within financial services, the department that generative AI is deployed in most frequently is sales and marketing. Maybe not that surprising, it's around the kind of 40% mark. The next closest is about 25%. So there's a lot of focus on applications within that growth space. What I found a bit more interesting was a third of the clients who had deployed it there had actually achieved greater than 5% revenue uplift through the application of that tech. This is a McKinsey study that you'll be able to find online. But that kind of shows the impact that people are now starting to realize, which is very significant from a bottom line perspective. I guess in terms of some of the type of stuff that we're seeing and doing in that space is particularly grounding those large language models in these rich contextual views of data. So if you've built that view of all of your customers and counterparties and relationships, and you can make that available to a large language model, it then means that your customer-facing teams, your investigators, can start asking natural language questions of that rich view of connected data. So for example, in the commercial banking and wholesale banking space, we've now got relationship managers who have access to an interface so they can ask, which of my customers have got the greatest exposure to car manufacturing in China, or who are Quantex's key buyers and suppliers, and which should I be targeting to bring into the bank? So it's really democratizing the access to all of that data, and kind of skipping out some of the time it took previously for relationship managers to go through some of those processes as well.
So that's amazing. So everyone can access the data in a very easy manner, detect frauds more efficiently, and before it comes to life. And also on NatWest side, I can imagine the impact. I mean, within 10 weeks, you cut off investigation time, I imagine, by, I don't know, 100. How do you see it? How do you see things evolving? And have you any view on the future, other things that might come our way? Do you have any input on that?
Yeah, I think for us, as I mentioned, that I think majority, if not all, financial services really want to become digital platforms, right? And we want to be a digital bank. We are a digital bank. Something like it's in the high 80% of all of our activity at NatWest is through digital channels. And if we think about financial crime, you've really got two choices, right? You either stay in what we call the silos: transaction, customer, tax, sanctions, etc., or you move to a dynamic world where everything is data, everything are events, and we know that works because of perpetual KYC, and you bring it all together. You'll have a number of specialized models, but they'll be generating insights that you take into a dynamic engine that is monitoring in-life activity all of the time, and not just managing risk, but also presenting opportunity to the franchises and removing friction from customers. You don't need to do outreach as often when you truly understand them, and making the job of our investigators much, much easier. They can truly use their investigation skills as opposed to understanding where to get what data from what system. So that's the journey we're on. We reckon it's a 3 to 5 year journey, but it's an exciting one. I'm really excited about it.
What about your future journey, Jeremy?
The future in a startup is like the next 18 months. So, no, I mean, like we already like pre-active on all those topics. So we're talking about like fraud detection by design. We're already at point whatever percent, making sure we not only reduce like the workload from people, but we only detect like the fraudulent transactions or like this kind of area. So we are already quite on the forefront there. I think it's for us like more how we leverage that to make sure we focus our resources on the right area, and personalization in terms of banking. I think this is for us like the key thing, because at the end of the day there's always some different events. So we need to really understand what the customer journey and making sure that besides like fin crime in general, we also empower like the customers in general, and personalization in terms of marketing, in terms of who we're targeting, in terms of like how we are screening them. I mean, obviously we are compliant and we're going to remain compliant, but we may ask different questions at different stage and so on. So really like making even like going one step further is how we really cater toward the customers. It's not about the bank itself. Like we've been already like we are B2C, so we're really user centric, but how we make sure like we simplify like the journey from the customer, and we provide like the right offering, the less friction by design, or at the right timing and so on. And this is really the next step there.
Perfect, thank you. One last question for you, Chris. Do you think this model, we talked a lot about banking, just the last question is can we duplicate it elsewhere?
Yeah, for sure. I think obviously a lot of the use cases and examples we've referenced here are very banking specific, supply chains, all of that sort of stuff. But I think this concept of a common data platform that can support decision making across an organization, both from a risk perspective and from a growth and a marketing perspective, is absolutely valid across a number of industries. We work closely with a number of insurers who are doing similar things across claims fraud, but also using that same data foundation to support underwriting and some of the sales and distribution work. Similar in telco, where you're building views of households that can support both marketing as well as potential fraud identification, and even more on the supply chain side, where you might be looking at supply chain integrity and risk, but also at opportunities for commercial optimization of some of those relationships as well. So I think for sure, I think the tricky bit, and I think it goes to something that Jeremy mentioned, is making sure that you can be quite flexible to support the needs of all of those different groups and being able to serve up the different views and the different insights that they need from that common foundation. That's really the key, I think.
Thank you for your insight. Thank you all for sharing your journey. So we're going to move to Q&A. I got...
Thank you very much. One quick question for you, Nigel. You mentioned that the FinCrime transformational project took 5 years. If you were, well, knowing what you know today, if you were to do it again, what would you do differently?
Oh, wow. It's a really good question. I wouldn't compromise on some key principles as much, right? Because obviously when you start something, you want to get momentum. And so, for example, some of the things we compromised on, I talked a lot about data quality. What I did is I built a moat around the engines that we were building. And if the data quality was poor, I wouldn't let it in. Now, that was partly to create leverage. Hey, producers, fix your stuff. Right, but I could have taken a more innovative way. I could have repaired some of that data, which is actually what we do now, and then you create that virtual loop much faster. I think that's probably the key things. There are some other things I would have done differently, but you'd have needed to bring industry and regulators along. For example, the most effective way to diminish financial crime is for financial services and public bodies to work together and consume the data that we each have to truly understand these patterns and cut them off right at the source. That's starting to happen, right? We're in year 3 of an experiment with the UK public authorities and some other banks. Singapore is advancing that way as well, but it would be great to see that move so much faster.
Everybody is shy or we are boring?
Yeah, everyone seems shy. Yeah, I'm keeping. Yeah, definitely. But maybe for you, Jeremy, what if you have one challenge? What would it be currently?
In terms of data and FinCrime, because I have like change every day. So the change we have for us is because we are a platform across like 24 markets, and the difficulty is like to make sure like we using, I mean, there's some advantages obviously, like using the same platform across all the markets, especially when you talk about AI, like you can train the model everywhere. But then there's a last mile, how you need to localize, and like where is it better to have like different scenarios, different alerts, different way of processing things versus global. And this global versus local is like obviously always changing, because it's always a trade-off. Obviously it's easier to have like the same framework for everybody, but you're missing some bits like locally. So there's always this part where in global organization it's always tricky, challenging, and we need to use muscles every day, or brain power actually, on data, and that's why we are doing like actually like in terms of focus right now.
You need to adapt to each market. Though you have a one global platform, you have to bend a bit for.
Yeah, I mean, some basics example where you see, so you would see, for instance, like fraud patterns that come from different countries. Like in France, would be different from in Spain. So people coming from a certain market would be more fraudulent in Spain and not in France, or vice versa. So this is like the thing where you need to adjust more locally. Like Mexicans would tend to be more fraudulent in Spain and not in France, for instance.
On NatWest side, did you merge these two subjects, financial crime, fraud, or are they still separate? Or
Yeah, we view them as separate sides of the same coin, right? And the key difference is fraud is in the flow, it's in the transaction, it's in the channel. And the initiation of fraud, 95% of it is click-throughs, right? You're just clicking on the wrong thing. And that's particularly in the UK, right? And about 80% of that comes from one platform that's here today, right? So it's, that's in the transaction. So the behavioral analytics that you need, right, are different. Right, but when you look at the data landscape, there's about 60% overlap. So we're on a journey where we are planning how we move to consuming the same data, and in financial crime, how we benefit from the insights they generate from their behavioral models in ours, and vice versa. But they are opposite sides of the same coin. There is this thing in the industry called FRAML, right? Fraud and anti-money laundering. Many people have tried it to have one solution that does it all. It doesn't. You can't, right? There's so many different topologies here. You need different risk engines to detect them and to treat them. But what you need is the data from them all fed into them all.
thank you. Thank you all for sharing your journey. I think we've all learned a lot. Thank you for being here, and we're done.
Thank you.
Thank you.
Thank you, everyone.